It's Groundhog Day again, which means it's a new month, and we're back to take a look at the dividend portfolio for the month of January of 2026, first month of the year. So it'll be exciting to see how the portfolio did, what buys we made, dividends we received, and how we're performing versus the overall market. And we'll be looking ahead to see what companies should be paying us in February and how much we expect to receive in dividends in February. January was a super busy month for me. I said I was going to try to release the dividend portfolio tracker in a full version, but I didn't do that. I basically didn't touch the spreadsheet at all. My fiance and I bought a house about the middle of the month. So since then, we've been busy. I've pretty much been there every night of the week almost, just working on it. Got some stuff to do, cleaning to do, and my apartment lease ends at the end of this month, so I got to get moved in by that time frame. So been super busy with that. Haven't worked on the spreadsheet at all or made any progress towards releasing it. That probably won't be till March once I get moved, or maybe even later and settled a little bit there. But the great thing about investing and dividend investing is I was busy this month, wasn't paying as much attention to the portfolio, but it was chugging along and generating dividends and reinvesting those dividends back into the companies and growing our ownership stake. So that is always a great thing, and one of the great things about investing and dividend investing for sure. So first up, let's take a look at the portfolio. This is the spreadsheet here, and we can see the one dividend raise we got this month was from Air Products and Chemicals, a raise of only 1% to $7.24 annually, which is not super great from APD, because if we take a look here, their average dividend CAGR over the last 5 years is 5%, and it was a lot higher maybe a year, 2, 3 years ago. So that is unfortunate that the dividend raises have slowed down, but that's certainly okay. Still a good company, and I definitely bought some of that maybe this past month. I honestly don't remember, but within the past few months below $250. I think that's a pretty good price for APD. Currently, the portfolio is just under $18,000 in value, and projected dividend income from this page here is $411. We'll see a little bit different number from one of the other pages, but first, I want to go into Fidelity and download all of our transactions from January 1st through the 31st. So we'll go ahead and download these into my folder here, save that up, and then import those transactions. Let's see, can't even find the right button. Import the transactions into my spreadsheet, and this is all part of the dividend portfolio tracker that, like I said, I'll hopefully be releasing in the next few months. So we got these transactions, and we can go ahead and insert those transactions with the script here. Click confirm yes, and we'll let that run for a few minutes. And in the official release version, once that is released, it will run much quicker. So the script finished up here, and we had a number of transactions for January. We'll go into a more detailed look of them in a minute, but here they are. So the one thing I do want to point out is this Amcor 0 shares. This isn't really a buy. Amcor had a reverse split. So any shares that aren't converted into a full share, you basically get just cash for. So this really shouldn't be a buy. It should really be sort of like a dividend from Amcor, because that is cash taken out of my position, or maybe like actually a sell. It's really like a sell, because it's cash taken out of my position and or now in cash in my portfolio. So that is one of the downsides with this spreadsheet, I guess, is there's some weird transaction types that aren't going to work out perfectly. And you can certainly move those around, and I might move this around to make it like a sell, because that's basically what it is, I would say. But if we go to this tab here, invested per ticker, and we go January 1st through the 31st, we can see here and sort by total amount invested. And then we get here, we bought a total of almost 6 shares of HP for $122, average cost of basically $20 per share. So HP really tanked a little bit this month, and I think it's a pretty solid deal at this point. So I went ahead and bought a decent amount. Procter & Gamble, about $45 worth at $140 per share. We got that Amcor, which, like I said, is kind of a sell. And then the rest of these are just dividend reinvestments. So those are the transactions we can look at now. Dividends we received. Only a few companies this month. We got HP, $18.78. Leggett & Platt, 62 cents, Cisco, $2.55, and interest on our cash of $3.32, which brings us to the month of January to $25.27, which looks fairly low. I think there are maybe two companies. I think this might be the cycle that Coca-Cola is on like a weird schedule and pay in a different month of the quarter. And then also JP Morgan, their dividend is the last day of the month, but that was on a weekend, so it didn't go through until today, Monday. So it'll be counted as February. So that kind of looks like a big drop off, but I think February should make up for it, hopefully, for the most part. We are just getting started on the quarter, so not much to see there, and same for the year as well. Pretty slow start to 2026 in terms of dividends, I'll say. And then if we look at upcoming dividends, we have these companies here that will be paying us in February. So we are projecting $31.30. The one thing is that's not including the JP Morgan dividend. So that will be an additional, I think maybe $5 or so for JP Morgan that will boost our dividend income a little bit. So that will be good. And with that update to the portfolio, looks like there's some issue. Yeah, this is part of that issue with the Amcor split, just because it had some weird ticker for the reverse split. But what I'll actually do, I think this should work, is if I say remove tickers with 0 shares, it'll run that real quick. And then it should remove this line and give us an updated value here. It might take a minute to run. So yeah, it finished that script and removed that weird reverse split ticker from our spreadsheet, and our portfolio value not changed much because we didn't make any deposits to the portfolio. But current projected dividend income from this page is $419.85. On this page, we're projecting $414. So it's about $5 difference there, which I think is about the difference of the JP Morgan dividend actually. So that could be the main reason, I would say. So still a ways off from $1,000 a year, and I think really the next big milestone would be $1,200 a year, because that's $100 every single month. But that's what the portfolio is looking like. We can go over to equity and dividend income by sector. Pretty heavy in tech and healthcare for sure. Lots of industrials as well. So I wouldn't say it's maybe the most diversified portfolio, but tech is obviously a pretty large chunk of the S&P 500 as well. So that makes sense. But I do have a little bit of a different allocation in tech with HP and Texas Instruments that are not nearly as high in the S&P 500 as Apple and Microsoft and some of those other big players. So we can also look at the charts real quick. I would say at this point, these aren't super interesting, but steady progress in terms of value. Obviously, value has stagnated some as we haven't been depositing to the portfolio. 5-year dividend CAGR up above 5% again, which I do like to see, but want to focus on increasing that as well. And dividend income trending upwards. The last thing we'll look at is the performance in Fidelity. So we can see 1 month performance, 3.82%. So we actually beat the S&P 500, and we've beat the S&P 500 over the last 3 months, which is great to see. 3.5% for the portfolio versus 1.8 for the S&P 500. When we look out to 3 years, the portfolio has performed very poorly over the last 3 years. 12.5% for my portfolio versus 21 for the S&P 500. So that's pretty crappy, to be honest. But on the 5-year time horizon, we're at just over 13.5%, S&P 500 is 15% and Dow is 13.5%. So beating the Dow over the last 5 years and lagging the S&P 500 a little bit over the last 5 years. So definitely still have some work to do, trying to make some improvements to the portfolio for sure, increase that dividend CAGR, and I still do have some low quality companies in the portfolio like Leggett & Platt and Amcor, but as you can see, those are some of the lowest positions in the portfolio by dollar value, actually the 2 lowest positions. So I'm not really investing additionally into those companies at all. As always, I'm open to feedback and suggestions around the portfolio, how I can improve my portfolio. And like I've said it before, this is just a small chunk of my investments. The vast majority of my investments are just in a few broad market ETFs that are pretty passive and even less work than this dividend portfolio. And I'm also looking for suggestions on the portfolio tracker spreadsheet. If you do have any, if there's any features you'd like to see or anything you'd like to see work differently, or if you're just waiting for me to release the full version, let me know that as well. And I will hopefully be able to get to that within the next month or two, but not making any promises because, like I said, I am pretty busy with some other stuff with the house. Thanks for sticking around to the end of the video. I really do appreciate it, and I'll see you all in the next one.